Hi friends, time to update on Tyson Foods that is in my stock portfolio and also two companies from my watch list, Disney and Starbucks. I will try to keep this video short. Starbucks, I haven't made a deep dive video yet on my channel, but if you want deeper dive videos on Disney or Tyson Foods, you can find them at my YouTube channel Arctic Money, so go and look for them. But now let's start with Starbucks. Starbucks, I have my fair value of the company, and when I say fair value in this video, I mean fair value for 10% annual returns. That's what I mean every time I say fair value, so you remember that now. Fair value for Starbucks, I think is $50. Margin of safety taken into account, that would make the company a buy for me at $34. Buying program, although I would start myself already at $55 levels, the current price is around $96 at the moment, so it's very much overvalued. My old valuation, I had fair value being $68 previously, but I took it down quite a bit since to 50 as said earlier, but still I would be interested to start accumulating Starbucks stock at $55 and dollar cost average down, as I believe in the company's moats. Sometimes you just need to pay for quality with a higher price compared to your own fair value estimation, and I think Starbucks would be one of those cases that I would be willing to start buying actually even a bit higher level than my initial fair value even was. $50, maybe would start buying Starbucks at $55. Nevertheless, the stock now at $96, hugely overvalued. Why I would be willing to pay more for Starbucks? Brand, they have. Economies of scale, they are a huge player in their industry, they have. Overall pretty great company, although would suffer probably from tougher economic times as people may cut down on expensive coffee and snacks and products Starbucks sell. They do sell with high prices. Competition there is always for Starbucks in their industry, as said. Founder Howard Schultz still active with the company and owns 1.91% of the company with value of roughly 2.1 billion. I always like when founder has skin in the game and is active owner still. No insider buying during last year, so the executives too seem to believe their company is overvalued because they are not buying any stock, and I also believe Starbucks is overvalued as said. Then Disney. Fair value I think is $61 for Disney. Margin of safety taken into account would put that in my books to $43. My buying program personally, I would start at $50. Current price around $90, so hugely overvalued, and the case is pretty similar to Starbucks. My old valuation in my older video, I was ready to start buying Disney at $75, but have taken now my valuation down quite much actually. About Disney, obviously great brands, scalability with brands and characters through many different business segments like Disney Plus, movies, amusement parks, cruise lines, toys and so forth. This I believe is Disney's biggest moat and why I would love to own company again. But the price currently is just too high. Also streaming wars is brutal and it remains unclear to me who will come on top as winners in the streaming wars. Big minus for me is that management or the board don't have really any skin in the game. They don't own the company's stock much. Also no significant insider buying during last year, so probably the insiders agree with me, insiders of Disney I mean, agree with me that their own company is overvalued at the moment. Same case as with Starbucks actually. And finally, let's move to Tyson Foods, that is already in my portfolio. Fair value of Tyson Foods, $59. Margin of safety taken into account would put that in my books to $40. My buying program I have already started. I have Tyson already in my portfolio as said, but I am looking to add more under $44 levels. Current price around $54, so not too far away from that, or a little bit far away, but not too far away. My old valuation in my old Tyson Foods video here on Arctic Money channel, I said I would start dollar cost averaging down from $58, which I did, and buy more if we go down, so actually no big changes to my Tyson Foods valuation this year. About Tyson Foods, obviously biggest meat company in the United States, economies of scale we have there, obviously, which is so important in food business. As you might remember, if you have watched, for example, my Oatly video, I think I discussed that economies of scale with food companies also in that video. But nevertheless, when we are talking about food industry, it is, in my opinion, great to be the biggest one in your own niche. And that's where you get the leverage to your raw material negotiations with your own suppliers. And that's how you get a company with better profit margins than smaller competition. That's how I believe and see things with food industry companies overall. Boring and hated industry is meat industry, which is great from a value investor perspective. Founding Tyson family in the board still with big ownership, which I like. I'd like to see the management own a bit more of the company, but during 2023 many members of the management team were buying the stock, which tells me that they believe the company to be undervalued. And again, I agree with the actions of the management team, or no actions in case of Disney and Starbucks. Insiders of Tyson were buying at $49 levels last year. Tyson is undervalued or fairly valued at the worst case, in my opinion. Happy to have this in my portfolio already, and depending on where the stock price moves next, I will manage my position accordingly. All in all, needs to be said that this really tiny sample size of 3 companies on my watch list actually represents more broadly how I see the Standard & Poor's 500's valuation at the moment. There can be okay deals like Tyson Foods available, but most of the companies in the index are at best fairly valued, most likely overvalued. At these levels, Starbucks and Disney are way too overvalued for me, way too risky. Unloved industries like meat industry might present opportunities, but with trendy companies like Disney and Starbucks here, and for example Magnificent 7 companies, it is extremely hard for me to see how you could make excellent investment returns outside really long investing horizon, let's say, or guess 5 to 10 years. Anything can happen in 10 years, surely, but I don't believe with these price levels there is much to achieve with, let's say, 5 years or shorter investment horizon. Obviously in the stock market everything is possible every time, as you know, but if you're looking at Starbucks, Disney, Magnificent 7 and you're looking for under 5-year time horizon, it is difficult for me to see how there would be big returns to get there, to expect there, to be honest. If you like these kind of stock updates, subscribe to the channel. I will be making these stock updates throughout the start of 2024. Thank you for watching this video. I see you in the next one, and bye bye for now.